About that rash you were talking
about.
No.
Hey, it's Edge Radio Australia. Time for the Crypto Hour of Power. Look, the lunatic is in the building. What can I say? For those listening on edgeradioaustralia.com, from the point of view of the radio, he just loves talking over the end, doesn't he? He loves having a bit of, I don't know.
I like hearing my own voice.
That's what it comes down to. Yeah, I was going to try and find a nice way of putting it, but I'll just say, look, Brandon's here from Orange Brick Road. Good to see you, buddy.
Yeah, likewise, champ. Mate. I like seeing you in person. We do it over the phone.
We do. So often.
It's a pleasure to come in here and look at your shirts.
Thank you very much.
Just get reminded.
I'm in touch with my feminine side today.
Yeah, and does that need to go closer?
Oh, if you want to, yeah, there we go. Okay. That's fantastic. Right. I can adjust that.
I mean, I'll take care of all the audio. Don't worry about it.
Why not? Why not, mate? Yeah. It's not the first time you've had a mic in your hand. Anyway, without any further ado, we are doing the Crypto Hour of Power. We're going to talk about crypto. We're going to talk about the elephant in the room when it comes to money, full stop, and so many lifestyles. We're going to use the dirtiest word in the English language. We're going to say it. Tax.
Yes, tax.
Tax.
And the elephant in the room is, the big state of government.
Oh, ain't that the truth?
And yeah, so look, this is not financial advice, educational purposes only, but obviously how you can minimize your tax. I would like to minimize it to zero, but that's just me.
Yeah, I understand.
But there are ways around it. So today we've got Kaylene in. And Kaylene is a tax expert and also specialises in crypto. She's been working with Orange Brick Road for a long time now, and she's been obviously in the crypto space for a very long time as well. So there's good to have accountants, but if you've got someone who knows and understands crypto, it's a lot better because understanding wallets, staking, liquidity, providing all the other moving aspects in crypto. And we're going to touch on a number of things today, superannuation, setting up trusts, how to minimize tax, structures, all that sort of stuff. So I'm literally going to be bored. But I'm going to pretend.
You should be excited by this, okay? Because you just said how much you hate tax.
Yes.
Right? It's a dirty 3-letter word.
Yep.
Now, this wonderful woman's come in here. Kaylene's going to explain to you, mate.
She doesn't need to explain it to me because she does all my tax.
Okay.
So what do I need to know it for?
Exactly. Actually, this is a really good point, though. Let experts take over, right? Okay, this shouldn't be something.
Yep.
I hate tax too, like I think most of us do, but that's not my skill set, so I want to keep away from that.
100%. Like my old man used to say, why have a dog and bark yourself?
It's great. I've never heard that.
Me neither.
There we go.
He's an old cocky man. Yeah, he's an old cocky, mate. Yeah.
Oh, well, would you like to give Kaylene a proper introduction so you've...
That was a proper introduction.
I thought you'd butchered it personally, but all right.
All right. Well, Kaylene's awesome at tax. And like I said, we're going to go through several things with tax. This not only applies to crypto, but sort of investing in itself and real estate and stocks or whatever you may be investing in. We'll talk about capital gains and how to minimize them. We're basically going to dive right into it. But Kaylene's going to be doing most of the talking because she knows more about it. Well, it doesn't take very much to know more about it than me.
No. Well, you know that concept of being the dumbest guy in the room.
Yep.
You take that to the next level, mate. I appreciate that.
Thank you very much, mate.
If anyone would like to make some comments or ask some questions during the show, you're very welcome to do so. I will get a little symbol up there that'll actually
You've already got a comment there.
We do have a comment up there, and I'll bring it up in just a moment.
Why does it say genius sign?
Oh, look, because that's a whole different thing, mate. You're looking at the wrong screen, okay?
All right,
There's a lot going on around.
It's the only screen I'm looking at, but okay.
See the bit that says Crypto Hour of Power? That's the only bit you need to worry about.
We're almost 4 minutes in and nothing's been said.
Well, yes, that's much like most of our shows. But
let's
talk to Kaylene. Let's get into it because we have brought an expert in, and it'd be really cool to hear you. Yeah, your thoughts on this.
Well, how we normally start it is we'll do a little bit of a background, what you're doing pre-crypto, how you got into crypto, and what you're currently doing within the industry. That's basically how we normally start things. So over to you, mate.
Okay, so Moral Wealth Accountants or MWA Crypto Tax Specialists have been into crypto for a long time. We used to work with, or we still do sometimes, work with another educator. OBR is obviously our preferred, I'd like to say.
Yep.
They used to just go, this was back in like 2016 or 2017. when crypto was not mainstream.
Sure.
I'm not sure if we're calling it mainstream yet, but we're getting there with crypto.
Pretty close.
Yeah. So Alex actually used to go with them around to like local community halls.
Okay.
And they would just, have people gather and he would give them tax advice back then. So that's how long we have been in the space for.
Wow.
And of course, it wasn't even legislated or anything like that back. Still not legislated, I need to add.
Yeah. It's not actually law yet, people.
It's not.
No. I mean, just like this show is not financial advice. We're basically talking about education. These are opinions as well. So, it is like it's a technology that's evolving so quickly. We obviously know what's happened in the US over the last few months with
Genius Act and all that.
Yeah.
Big changes there.
Yep.
So
it'll be interesting to see what happens here. But it looks like, I don't know whether the government doesn't want to, they're afraid to, but they're not legislating. But that does not mean you can't opt out of tax because they know that you have crypto.
Yep.
Sure.
So we can't opt out, but by not being legislated, we have no rules that are black and white.
Okay.
So it means that the ATO can change their approach at any time.
Well,
which
they
is
can
not
do
fair.
that at any time with anything anyway.
Well, yeah, pretty much.
Yeah.
I watched a very interesting doco, God, I'm getting off subject, on Four Corners the other day about how they are the most, they are not transparent at all.
No.
All the government agencies, they are the least transparent. It was quite interesting. But anyway, let's get back to the tax. I would like to say
I'm just
that
surprised there was something interesting on the ABC.
The moment you said Four Corners, I suddenly, I'm not going to lie, I suddenly went,
That's right.
sorry,
yeah,
I'm just
I don't
nodding
normally
off,
watch it either, but it was about the
Arsehole.
ATO, so I jumped in and had a look.
Arseholes broadcasting communism.
That's right.
That's the ABC. Not financial advice.
I would like to say that although we are accountants, it does not mean that we represent the ATO. We have to follow law. I mean, that's no question at all. But we work for our clients and we will do the best that we can for our clients.
Within their guidelines.
Not what is best for the ATO. So we represent clients, not them.
Oh, that's an important distinction.
I'd like to make that clear. Yeah.
I appreciate that. Because, I mean, you've got to work within the framework you've got there. But, sometimes, and I've dealt with accountants like this, so where they're almost just, it's always a historical thing. They're not looking forward. They're always looking back. And therefore, you almost wonder, well, you're not wonder, but it feels like they're working for the ATO. It feels like they haven't got your best interests. It's kind of like, yeah, look, just finish it off, tick this box, tick that box, yada, 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 and we move forward. Whereas modern accounting, and certainly with crypto, I would tend to think, and I'm sort of asking the question at the same time, you've got to look forward. You've got to plan forward a lot, and a good accountant that understands crypto will help you with that, I would assume.
Yes. Yep. We always ask our clients, regardless if they're crypto clients or whether they're business clients, you have to work with us at every step of your journey. If we get to 30 June and prepare your tax return and you haven't reached out to us once about any decisions that you've made throughout the year, we have no option but to work historically.
Gotcha.
Because what do we do then? There's nothing we can do.
That's a good point.
But if clients actually reach out to us and say, this is what I want to do, what does it mean? How can we do this better? Then we can guide, we can, drill down and see what will work best, both for perhaps asset protection and for tax planning, etc.
Yeah.
Yep.
And
so
that's a really,
we can't work retrospectively.
Yes, and it's now saying that, and I really appreciate that, Travis. Aaron's shirt is so cute. Yes, well done, mate.
Oh, yes, thanks for the important questions. Appreciate
Cool.
that.
Yep. Throw it in, brother.
It's a nice shirt.
Big hitter.
Dear.
Okay, now is when I got into crypto, 2015, 2016, and I just didn't worry about tax. I didn't keep any bookkeeping or any records or anything like that. And in retrospect, I should have set up a trust. I should have put things through the business. I should have done it in a professional way. You know what I mean? So now historically, Kaylene and some other people have had to look back on years and years of me going through it, having no idea.
Clean up aisle 4, right?
Exactly.
Yeah.
But like, it's setting yourself up correctly before you start participating would be obviously financial advice.
It would definitely be, yes. And you need to plan. People get really excited about buying an asset, buying crypto, and they just jump into CoinSpot, CoinStash, whatever exchange they're jumping into, set up an individual account, and they'll buy something. And then, some people might just stop at $100 and go, hey, I better talk to someone. Or someone else might jump in and spend $50,000 and they've got all these assets in their own name.
Yep.
And that can be difficult to move, especially now. So when we're in the bear market, it was really easy to just go, we can just move it from your name over to a trust.
Yeah, sure. Because it's not a taxable event.
It is a taxable event.
But
it is classed as a sale. You haven't 10x.
Yeah.
In the bear market, your portfolio is neutral or down.
Yep.
But now we're not quite at that bull run yet, but we're in between. And a lot of people are sitting with some profits on some of their assets.
For a lot of people aren't going to understand because, they might be new to crypto, they might be new to investing, bull and bear markets. And also, if you could explain what X means.
Of course.
Sure. Well, in traditional markets, they talk in percentages. In crypto, we talk in X's. Like
times.
2X is double.
Yeah,
10X is obviously 10 times.
10 times the.
Whereas, if you're buying a BHP stock and it goes up 15%, everyone's celebrating.
Yeah.
In crypto, you're depressed.
Very much so.
It's accurate.
But the same on the opposite side too. You get traditional stock people where they'll freak out because in a day it might drop 28% and they're ready to throw themselves out of a window. It's just like, hey, that's crypto. It's Tuesday. Get over it. The volatility goes both ways.
Yep.
Yep. So sorry.
No, that's okay. So the bear market is when prices are in the gutter.
Yeah.
And the bull is when they're rising and we're all taking profits.
Sure.
Yep.
And it basically works in sort of 3.5, 4 year cycles. You know?
Yep.
So you have about 2.5 bear and then about 18 months a year, 18 months bull, which we're in about just sort of the start to about the middle of it. And this is where a lot of people also get it wrong. And everyone starts jumping in during a bull market and getting excited.
That's when FOMO hits.
Yeah, because it's all out on the news. Everyone's, Bitcoin's hit an all-time high. God, I need to buy some. You should have bought some a couple of years ago.
Yeah, when people were saying, don't waste your money.
Yes, that's right.
Yes, buy in the bear department, in that sort of market. Yeah.
Yep.
But there's also time frames as well. And once again, my ignorance, because the taxation is tiered, isn't it? Like if you hold an asset for 1 year to different to 2 years to 5 years.
So
what used to be and it's not now? Or?
No, it's always been if you hold an asset for more than 12 months, then you'll get a 50% tax discount. So you'll only pay tax on half of your profit.
Okay. So anything after 12 months?
Yep. Whether it's 12 months and 1 day or whether it's 48 years, that same discount will apply.
Right.
Yep.
Okay. If you hold it for less than 12 months, then you will pay tax on the full profit.
Right.
Okay.
Because a lot of crypto talk about how it's tiered. It's everywhere with crypto people. No, they say it all the time on social media. Like everyone's an expert in crypto.
Individual tax rates are tiered, if we want to call them that.
Yeah. I think that's where they're getting mixed up.
And you pay tax where assets are held in your own name or a trust.
It becomes income.
It becomes income.
In your name.
Yep. I'm going to go back. I'm going to start from the beginning. So if you're holding assets in your own name, it is you, the individual, who pays tax.
Yep.
Okay, in your own name, based on your individual tax rate. So whatever other income you have, the profits will add to that income. They're not taxed separately, but they will add to that income, and whatever tax bracket you're sitting in, that's where you're paying tax.
So as an example, you earn $50,000 a year.
Yep.
You get taxed on 50 grand. If you earn 50 grand a year and you've done $50,000 worth of profit, you now are getting taxed for 100 grand.
That's correct.
Yes.
Right.
Yes. Okay. Yep. So that's as an individual.
Yep.
Now, if you move those assets into a trust, this may be confusing. A trust does not pay its own tax. Okay. Unlike a company or unlike individuals, A trust does not pay its own tax.
Okay.
The beneficiaries pay the tax.
Right.
So the profits must be distributed every year in a trust to beneficiaries. Now, those beneficiaries are determined, one, by what the trust says, but the trustee makes the decision as to who will have the profit.
All right.
Can be individuals or it can be a company. People may have heard of the term a bucket company. So
no, I don't know that. Funny enough, I've never heard that one ever.
So a trust, when they have lots of profits, and individuals, you don't want to hit every individual with a 50% tax rate. You can distribute profits to a bucket company. Now, it can get a little complicated in terms of you will have to actually physically move that profit to the company.
Okay.
Otherwise, we run into something called Division 7A, which is another whole story. I'm not sure if you want me to touch on that.
This sounds like so much fun, right?
But it becomes complicated if you don't distribute those profits physically to the bucket company's bank account.
By distribute, you mean just say, okay, all three of us are in a trust.
Yep.
Okay, we've put $10,000 into something. It's now turned into $15,000. So there's $5,000. Do we have to sell that $5,000 and then divide it up between our three, or can we hold on to it?
Okay, so
like when you say every 12 months it has to be distributed.
Yep. So we're going to talk about profit, not unrealized gains. Okay, so we're going to leave super aside. We're not going to touch on super
is such a
right
grey
now.
area, particularly at the moment.
Yep.
Yeah.
So in a trust, you pay tax on your profits, and profits in crypto.
Even if you haven't sold it.
Yep. No. So let's determine what a taxable event is.
Yep. Okay.
Okay. So in crypto, a taxable event happens when you swap tokens. So you're swapping ETH over to Pulse.
Yep.
And we'll talk about that because you also bridge ETH over to the Pulse chain. So you have to bridge it. There's a taxable event. But in order to bridge that ETH, you're also wrapping that ETH.
Yeah.
So you can bridge it across.
Oh, thank God we've got you because I'm already so lost.
So there's a taxable event as well.
Right. Wow.
And then...
So every time it gets touched. So, for example, if I have to... I've got some BST token, for example, and I have to then swap it into ETH to then sell it, to then send it to an exchange because the exchange doesn't accept my BST, so I have to swap it into ETH. That's a taxable event swap, and then the sending is a taxable event, and then the selling is a taxable event.
Yep.
Including when you wrap.
Yep.
So every time it gets touched or moved, every time there's a fingerprint on it, no matter what it is a taxable event.
Yep.
And the fees that you pay for them transaction would be a tax deduction.
Correct. Yep.
Okay.
If you're just transferring...
How can they possibly follow all of that? I mean, crypto, you and I know what we're talking about wrapping, and a few in the audience would. A lot of people don't. How is some government employee that has no idea about crypto to understand any of that?
Yep. So first of all, you need really good reporting. Really good reporting.
So basically you have to tell on yourself because otherwise they wouldn't know.
No. So what happens in the event of an inquiry is that we have a year-end report of all of your crypto transactions and we just say, here, read the transactions. If you have a really good report, then that's all the ATO will require. There would be no need... There should be no need for them to look any further. But if they've received other information, they may...
exchange, for example.
Yep. So if you've opened up a CoinStash account or a CoinSpot or there's hundreds and hundreds of exchanges.
Because they can be audited. A lot of people don't know that.
Of course they can be. Yep.
Exchanges, you think that they work on behalf of the government can audit them at any stage.
Yep, and they have to report to the government, to the ATO, when an individual opens up an exchange account in their own name. So that's how the ATO knows.
Yep. It's through your KYC, which is know your customer.
Yes, that's
it's uploading a bill, your driver's license, bank account details and all that. You know.
So you want to do the right thing. You want to report
No, I don't.
or-
I want to save as much tax as possible.
I know that, but there's no getting around it. They know. Okay, all of these exchanges are reporting back to the ATO. So let's work with what we have. We know we can't get around it. And it doesn't matter how much we want to, the ATO knows. So let's be realistic and let's work with what we have. So why hold assets in your own name? You have no asset protection and you're going to potentially be paying the highest tax rate.
Yep.
Why hold them in your own name?
Okay.
Let's look at it something else.
But like a company or an entity?
A company or a trust, or you can even look to superannuation.
Okay, before you go into that, because this is really interesting, is there in my mind there's a cutoff margin, right? So say for example, if you're just putting in $100 a month or whatever with crypto, it's really not necessary to spend the money in setting up all these trusts, right? If you're putting in, say, a substantial amount, you know, say $5,000 plus, then it kind of justifies the cost of setting all this up, or should they do it regardless?
Okay, here are my thoughts. And of course, everyone has their own.
What's your opinion?
That's right. And it's your money at the end of the day. But here are my thoughts. One, let's talk about asset protection. Let's talk about generational wealth. Let's talk about inheritance tax. And they're all linked.
Yep.
So as an individual, doesn't matter what asset you hold, you have no asset protection. If someone sues you, then all of the assets in your personal name are at risk. So now we're talking your car, if you have any money in your bank, your house. Like if someone sues you, you could lose it.
Okay. All right.
You know, you're driving down the freeway, you're on your phone, you get distracted and you ram into the back of a Porsche. You know, anything can happen.
Sure.
So the guy's a CEO, you break his arm, he can't work for fucking 5 years or something like that. You have to pay all that out. A lot of things happen. Okay.
People take advantage.
People definitely take advantage. And Australia is the second most litigious country in the world.
Who's the first? America?
Yeah. Per capita, we're leading that, believe it or not. Yeah. Apparently per capita, we are now the most litigious country on earth. Well, about a couple of months ago. Yeah, someone let me know.
Do you want to risk your Bitcoin?
Right.
Hell no. So
if
that's
you've got
the
it in a
consideration.
company name, it's different. Is that what you're saying?
Yeah, because it's protected.
Right.
Okay, so if someone sues you as an individual, they can't sue something that you don't own. Because if you have it in a company, you don't own it. Or a trust.
Who does then?
The company or the trust.
Yeah.
Okay, so now it's about own nothing, control everything.
Please say that again. I think this is great. Like down the camera, boom, nailed that one. That's a good one.
Okay, so we always talk about own nothing but control everything, because then you're going to protect all of the assets that you work really hard for. Let's face it,
as
we work
opposed
damn
to
hard.
own nothing and be happy.
Yeah.
The WEF and all that.
That's right.
You'll own nothing, but you'll be happy.
Good old Klaus. I mean, come on. He was really thinking about us.
No, we want to control everything.
Right.
We want to own nothing, but we want to control it.
Yeah.
Sure.
So that's the asset protection. Now let's look at creating generational wealth in a structure. If we're set up in a trust, all the trusts that we set up don't have an end date. Every state in Australia, with the exception of South Australia, all their trusts die, if you like, at the end of 80 years, which means that you're forced to sell all of those assets, wind it up, pay the tax, and then start again. South Australia.
Can the government department enforce when you sell something?
Yeah.
Because it's written in the trust deed, which is obviously some
Can you
government.
just scrub it out and initial it?
It's a legal document, so no.
Yeah, okay, but the question still remains. How can a government department force you to sell your own property?
Because
if you own something,
whatever person came up with this way back when, and this has been around forever, seriously, except for South Australia.
So why
They
South Australia? It's interesting.
I actually don't have the background, but South Australia do not have an end date on their trusts.
And the SA in South Australia stands for Sad Australians. It's a fact of life.
It's a fact of life. This is what. There's a reason there's so many churches. You've got to do some praying over there.
Yeah, man. I've been in Adelaide, man. They've got some beautiful churches, eh? It's amazing. Anyways.
I want to ask on that because, I mean, obviously we have also 99-year leases, all of that. Okay, there's an end date on all these things. 80 years seems a strange one.
Yes.
It really does.
It does.
That's
average life expectancy. I mean, it had to just throw a dart and come up with it.
And I actually don't know.
No, fair call.
I don't know. But all trust deeds have an 80-year lifespan with the exception of South Australia.
Right. So, I mean, to me, guess what I'm hearing? I'm hearing structures.
Yep.
It's, geez, why in the world do they not teach us at school? Well, we know why, because they don't want us to get on top of this. But it's all about controlling the population. But, this is the thing. If you're 20 years old and you set yourself up with trusts or companies or whatever you needed to do, probably trusts, I gather, in this circumstance, you can protect so much of your income and you're protecting your assets for exactly what you're saying, generation-wise.
Yes. So
from the word go.
Yeah. So when there's no end date, you're not having to wind up the trust. Our trusts also have succession planning inbuilt, which means that you are naming who will take over after you pass away, who will take over after that, and who will take over after that.
Oh, wow.
So generational. So you can name your 3-year-old grandchild because by the time they take over, they're going to be over 18.
I hope so.
That's right. We hope so. If not, they'll have a guardian. So you're creating generational wealth. And now there's talk of an inheritance tax, which will come into play at some point.
It will.
So an inheritance tax is so when you pass away, all of your assets will go into your estate. And then according to your will, they will get distributed amongst the determined beneficiaries. So there is a change of ownership happening. If everything is in the trust, there is no change of ownership.
It's already been known.
Only control.
Ooh.
Okay. Nice.
No inheritance tax.
And
until they change that law.
Don't tell them.
Shush
Mum's
everyone.
the word, right? Okay. All these people watching this now, we're on it. But this is, it's, I mean, look, it's theft. It's absolutely disgusting. Inheritance tax, death tax, however you want to talk about it. Unfortunately, the Labor governments and the Greens, they're selling it, right? We know what's happened in the UK over the last few years with the effectively death tax, inheritance tax over there, and all the problems that have been caused from that. It is just unbelievably detrimental to what you're trying to do. I mean, in everyone's life, if you can build a legacy to put onto your kids and your grandkids, why the hell wouldn't you do that?
Yeah, exactly.
And to see the government just come in and just grab and steal, and I consider it absolute theft. It's wrong. So if you can come up with a way that you can structure things so you can avoid this very legally, right?
Yeah.
Yeah.
Yep.
Why wouldn't you?
That's right. So for me, it makes sense.
Agreed.
Yep. So a trust or a company can do that, provide succession planning. So, you've got your generational wealth, protect your assets. So then it's about what structure is going to work for you.
Okay.
Yeah. Has to be personalised. Your circumstance, how old you are, what your income is, what your sort of, even down to the job that you've got, how many spouses you whatever. So it's very individualised, isn't it?
Yep. And of course there's a cost to setting up the structures.
Yeah.
So going back to Brandon's question, if all you're going to be doing is, putting in $100 a month perhaps into crypto, do you really want to do it? Is it worth the cost?
Yeah.
Again, that's an individual answer.
Sure.
But for me, it's worth it.
Yeah.
You're protecting the assets, providing succession, in generational wealth. You have succession planning built in, getting around inheritance tax. So
just getting it right from the start.
Why wouldn't you?
Yeah, 100%.
Yeah, and also when we talk about when you pass away, wills and a massive amount of wills are contested. We know that now it's over half of them are being contested now.
Yep, and of those, 80% are successful.
Really?
Yep.
Wow.
Yep. That's crazy.
you are.
And I've also got here in Australia, there have been 2 successful cases where an ex-spouse has challenged a will.
Right.
Now the
Freeze it up in
ex-spouse won, yeah. So the probate. So then it also goes on for a couple of years when someone challenges your will. But an ex-spouse who has received a financial settlement 10 years ago, whatever, has challenged the will and won.
Really?
How?
It's happening a lot. Actually, I'm hearing about this. Look, I've actually had people contact me about this.
Lawfare, man.
Yeah,
It's
it
crazy.
really is. I mean, look, unfortunately, you really do see the worst of human nature the moment someone dies and there's money.
So true.
The scavengers are out, right?
Yeah.
Look, lately a couple of people have come to me with stories exactly that someone has passed away and the former wife from 20 years ago has put her clause into the settlement. Well, guess what? She already got paid out at the time. She got the house, she got the cars, she got half the super 20 years ago, and now she's putting in the clause in, and the kids are losing their inheritance.
Yep.
The father has passed away, and his legacy that he wanted to pass on to his children, some bitter woman from 20 years ago, and I mean, it happens to both genders, obviously.
Yeah.
I'm using this as an example because that's what was brought to me. But has got a clause into it. It's just disgraceful.
It is. So with the succession planning and there being no change of ownership, those assets that are held in the trust or the company never become part of the will.
Sure.
Right.
So they're never in the estate.
Yep.
So even if someone challenges the will and everything gets held up, and let's say there's only a house, a car, and a couple $100 in the bank, and everything else is sitting in a structure, well, the person that is challenging the will can only go after the car and the house, not whatever assets is owned.
Oh, nice.
Yep.
Yeah, freeze the X out.
Yeah.
Sounds great.
Sounds great.
And then I'll also let you know as well that our trusts are bloodline trusts. So ex-spouses cannot come after the...
And not bloodline.
Yeah.
Ooh.
Nice. Good to know. All right, so let's get into superannuation.
Yes.
Because through yourself and myself and us working together, we've put a fair few clients super through into crypto.
Yep.
It seems to be the theme going forward because it's a lot of money. Well, people who do have money, tens of thousands of dollars, hundreds of thousands of dollars in super.
Yep.
And it's pretty much stagnant if to a point of losing money, with inflation. They say inflation's between 3.5 to 4.2%. It's really in realistic terms between 7 to 9%, in actual gain value because governments, they play with the inflation statistics. They just include some things. They include other things to make it up and lower, right?
Yep. And superannuation funds, there's a couple of recently gone under.
Yep.
Yeah.
Yeah.
So, not your coins, not your not your crypto. So, if someone else is controlling your money, probably not a cool thing, because exchanges go bust, financial advisors that invest your money can go bust. All manner of things can go bust.
That's right.
But it's a good way of people that have that money that's already there, instead of it losing value, is to actually gain value. So, I'm 100% ignorant. It's the first time I've ever heard of it. I've never been into crypto before. I've heard about this Bitcoin thing. Let's go crazy.
Okay. So
do we need a trust? Do we
need a superannuation fund, which is very similar to a trust. Unlike the trust, there is no succession planning. Okay. And not many people know this, but superannuation already has an inheritance tax.
Okay.
I didn't know that.
Yeah. So
I'm not surprised, but I didn't know it.
So when you pass away and people get the proceeds of your superannuation fund, they're distributed. Because the superannuation fund pays tax at 15%, the beneficiary will pay an additional 17% on that superannuation fund inheritance. So it's not called inheritance tax.
Sure.
It just comes with an additional tax, but essentially that's what it is.
All right.
And why? Because?
Because they can.
Yeah.
Okay.
All right.
So Getting around that, what you would do is you would sell or pull down all of your assets out of the super fund. And then if they're distributed via the will through the estate, then those assets, most of the time, there are rules around a lot of them, so don't take it as a blanket, there is no tax. But generally speaking, a lot of them, particularly cash and a family home, come to you tax-free.
Yeah,
Okay.
and as I understand,
a couple of rules around it. But yeah,
of course. So, and the difference too, you can access it after 60, not 67. Yeah.
Yes.
Okay. Because the government obviously consider retirement 67, right?
Yes. So for a Centrelink, yep.
Sure.
Centrelink.
Okay.
Again, there's a couple of rules. You've always got to meet the rules. So you can retire at 60,
right,
and draw a pension from your super fund. You won't get a Centrelink pension at that age, but if you have enough to provide your own livable pension, then you can retire at 60. If you continue to work until you're 65 and you still don't want to retire, you can then draw a pension.
Okay.
So you can be working and getting a tax-free pension.
Right.
But at 60, you can't work and get a tax-free pension. So 60, you're fully retired, draw a pension. 65, you can continue working and draw a pension from your super fund. At 67, then you can go to Centrelink. But
here's a bit of a thought from my point of view here is that wouldn't it be nice to not even have to worry about that Centrelink? Wouldn't it be nice to not worry about the 67? When we're talking about with crypto particularly, I mean, the percentages, the times, the growth is often so very,
Look,
very
by the
big.
time that we get close to that anyway, the rules would have changed another 25 times. You know what I mean? And they've probably moved the age barrier and
but
all manner of stuff.
The idea of having compulsory superannuation was so that the ageing population was no longer a burden on the government. So the idea was to phase out
their entire life,
age pensions.
Yep.
And we're now getting to superannuation has been around long enough that by the time we get to retirement, we should not be needing a Centrelink pension.
Sure.
We've been working, they've been, putting our super aside, and it's been invested really well, right? Well, we know that's not the case. And the rules around super keep changing.
Yeah.
And the government keeps making it harder. And super is also an easy target.
In what respect?
Yeah.
So we'll talk about the unrealised gains that have just been introduced.
So that hasn't gone through though, has it?
It's interesting. Yes and no, because
I love
it's
this
applicable.
About lawyers, politicians and accountants. When you ask them a question, they go, yes and no. It could be, but it might not be,
Well, it's in play from the 1st of July 2025. It came into effect, but it actually hasn't been legislated. It has not been finalised.
Right.
So what, is it in the Senate or?
Yeah.
Okay.
Yep.
But it's come into effect. It just hasn't been legislated.
That's right, which is why I went yes and no.
Right.
So, but yes, it's definitely
So we need our
play.
senators to step up and say no.
It's not going to happen.
I
now.
know. I live in a paradise here where I dream about these.
A delusion.
I think the reason super is an easy target is because you think of the younger voting population,
They're not
18,
thinking
20,
about it.
No.
Yeah.
because they're not old.
Yeah.
That's something that they'll face when they're 45, 50.
Yeah.
They'll start thinking about that way down the
Even
track.
if you are 40, 45 or something like that, it's still 15, 20 years away.
Yeah.
It's not like they're taking it out of your pocket right now. If they were and people realise that, there would be more outrage.
Hence the easy target.
Oh, that's right. Well, this is why when we're coming up to an election where particularly the Labor Party and the Greens, both those parties love latching onto franking credits, okay?
Yes.
Because they know this is a way of buying votes because you're talking to the younger population. Anybody sort of under the age of, probably 55 doesn't even know what it is. And screw those, in this case, where we are right now, there's a big attitude against the baby boomers, the people who are retiring now and will have been for the last decent period of time. So it's a cheap way of buying votes.
Absolutely.
Yeah.
Yeah.
Yep.
Everything the government does is buying votes, basically.
That's all it is.
Yep.
Well, they like to import a lot of voters. That's
Oh,
right.
there's that too. Yeah. Okay, so I've got $200,000 in my, just round figures.
Yep.
I would say $100,000 in my superannuation. How much Bitcoin can I buy with that?
You can buy as much as you like.
So I can buy $100,000 worth of Bitcoin.
Yep.
Excellent.
One thing I would say is always keep some cash in the super fund bank account to meet the ongoing costs, because you don't want to be selling any of your assets unnecessarily.
Sure.
So your ongoing costs are your accounting fees, audit fees. There is something called an ATO supervisory levy. That's $250. If you have a company that is the trustee of your super fund, you will have an ASIC annual fee, which is around $65. So you always want to have some cash in the bank so you're not forced to sell. And then if there's any tax to pay.
So 60 or 70% would be about the medium.
Yep.
All right. Is there any other crypto I can buy, or just Bitcoin?
You can buy any crypto.
Oh, nice.
The rule, pretty much almost any crypto. You can't have liquid loans. Super fund is not allowed to borrow money.
Yeah, okay.
Okay, so liquid loans are out. I know it's not borrowing money, but it's borrowing something. Can't do it.
So I can't say, for example, buy a bunch of even Bitcoin, but buy the Bitcoin and then get a loan against it.
Not in a super fund, no.
Right. Okay. So it's basically, once it's in there, it's in there.
Okay. Yep.
Okay.
Yeah. And Lisa, everyone loves my beanie, mate.
I'm laughing about the fact that the questions and the comments coming in are all about our fashion choices. All right, there we go. How about some more questions about crypto?
So I can say, for example, I could ring an expert, right? Or someone who's been in crypto, like someone from orangebrickroad.com.au.
Yep,
just
great
putting
choice.
it out there, right? And go, hey, I've got super, I've got 250 grand in it, 800,000, whatever it might be. Can you help me set up a portfolio? I then go, okay, not financial advice, educational purposes only. That's a carton.
That's a carton.
That's a carton.
There we go.
Yeah, that's
He's
a
going to
carton.
fill the fridge at this rate.
Carton of wine? No?
Every time you can.
Sure, why not? Okay. Hey, we don't discriminate around here.
So then, and then we go, okay, cool. Not financial advice, you're going to put personal only. This is what I do. Put so much into this coin, that coin, build up a nice portfolio. We like doing that, depending on their time frame, but also how tech savvy they are. Like if someone can barely use Zoom and they're struggling, I only put them in 2 or 3 coins.
Yep.
If they're more tech savvy, we might do 8, 7, 8, 9, 10, or whatever it may be, some staking, whatever it may be. Then go, okay, they're like fantastic with that. Here's our portfolio. All right, now Kaylene, take over and you set us up how we actually do the buying stuff, or do you set up all the paperwork?
All the paperwork.
And then send them back to me?
Yep. So there's a little bit of a process to set up a super fund.
How long does it take?
It can take up to a month.
Right.
So setting up the actual super fund itself, nice and easy. We can get that done within 3 days.
So we can start buying on day 4?
Not quite.
Right.
So you have all the documentation. Go and open up a bank account. You have to let the ATO know what the bank account details are. So
does it have to be a separate bank account from the other?
It does.
Okay.
It has to be a bank account that is just for the superannuation fund.
Okay.
So you cannot touch any money that's in there. It is purely for the super fund.
Even though it's your money? Makes sense. Okay, continue.
It's there for your retirement. And
you don't actually own something if someone can take it away from you.
So then you set up the bank account. You then apply for a rollover from your existing fund. You can do that online.
Okay.
We provide you with an ABN, TFN, and what is called an ESA, an electronic service address, which your existing super fund will need those details. And then they will send the funds over to your self-managed fund bank account.
Your designated bank account?
Yep. And from there, you can then go and set up your exchanges in the name of the super fund.
So the exchange, for example, if I'm already on CoinSpot or Uptrade or something like that, I've already got an account with them. I then have to set up a different identity within that exchange.
Yep.
under the superannuation name or company name or trust name.
Yep.
Okay.
Yep.
Which all exchanges do, by the way. You can set up both.
Yes.
This is why education is so valuable on this. Yeah.
It is a process and it is a pain in the ass.
Yep.
You know what I mean? But once it's done, it's done. You know, it's like cleaning your room. Nobody wants to do it. But once it's done, you walk in, it's clean. You go, oh, sweet. My wife's been here.
No, mate. Because guess what? You've got to clean it again.
That's why I'm no longer married.
Exactly. You've got to clean it again. It's not set for life, just so you know. Once you've cleaned your room, it will get untidy again.
I know. It doesn't take me any time.
All the hard work is done by that stage. Then you just need to ensure that all transactions are coming through your superannuation bank account to superannuation exchanges accounts.
And keeping them separate and not muddling them up.
Do not muddle them up. We don't want to see any personal transactions in the super fund bank account.
Of course not. Because
you will get a what's called a qualified mark in the audit report. And then that gets flagged with the ATO, and you don't want to do that.
Yep.
So super funds are also audited every year, and they're not audited by the ATO. They are audited by an auditor that is selected by your accounting firm.
Yes.
Does that cost money?
It does.
Okay.
It does.
So that's an ongoing cost?
It's an ongoing cost, like the accounting fees.
So to maintain, like, just say $100,000, right? Or round figures again. To maintain this entity every 12 months, what's the cost in that?
So it would start from $2,000 for, I'm talking our firm, obviously. All firms are different.
Sure.
So it comes down to the complexity of your super fund. If all you have is some crypto,
just say you bought Bitcoin, that's it.
Yep,
that's all you got.
Nice and easy. So you'd be looking at around, so you'd have to get the crypto report as well. So, 2 to 2.5, no more than that, including the audit. I will say here that for our super funds that have crypto, we do have a crypto-friendly auditor. He's really happy to sign off on crypto. Okay. He only has one condition, if you like, and that is the member of the super fund. So if it's your super fund, you cannot prepare your own crypto report because he doesn't reproduce that crypto report to see if you're correct. But for anyone that uses online crypto reporting software, you can get a lot of errors. So there's no way the auditor can tell whether those errors were fixed.
Them online reports that are given to me a rough guideline. They're not cement.
So you need, our auditor says, I want a third party. So OBR, you have someone that does crypto reporting. We also know someone else that does reporting. Right. Actually, no, you've got both. You work
Jamie
with Nexus and Heidi.
And Heidi,
Yep. Okay. So they are the people that prepare our reports. So that's it.
Okay.
Yep.
So there's an ongoing cost of a couple of grand thereabouts. So that's what I mean by the barrier to entry.
Yeah.
You know, if you've only got $2,000 and you set it all up and whatever, and it's going to cost you $2,000 a year, it kind of is no point,
Yep.
So.
Yeah, for a super fund, yes, but not necessarily for the other structures.
Yeah. But the other stuff you're going to probably save in the tax, I would tend to think anyway. That, you certainly would balance.
You can.
Not balance itself out. You'll probably come on the positive side of the ledger there.
Yep.
Okay. We've come to the end of the show.
What do you mean? Doesn't it go for an hour?
Dude, this is different to radio. Okay. You've got to have you learned the concept of a podcast yet? How long have we done this for?
But it goes for an hour.
Okay. Well, do you have anything else you'd like to cover?
Yeah. Why is it going for an hour? That's all right, mate. I'm just taking the piss.
I know, mate. I know. But I know, well, look, I just really want to wrap things up in a very positive way because, I'll tell you what, I've learned a lot from today. And if you've been watching and you've kind of come in halfway, please go back. Go to edgeradioaustralia.com. You can listen to, obviously, the audio. We'll replay this show on Sunday. But apart from that, go anytime to YouTube, to Edge Radio Australia on YouTube. You can watch this forever because there's a lot that we've said to this entire conversation, which, look, there's so much I've learned there's things that I've missed before, and no, I really appreciate it.
It's always to go back around.
Yeah.
But just go to orangebrickroad.com.au. You'll see in the services tab, we've got about 14 services there, different parts of crypto. You'll see a tax tab and Kaylene's details, or you can get hold of me. We were going to change the name tax, there to theft, but then I still think we might.
Just do that in your mind.
Yeah, that's right. Yeah, but
And
just
if you see that,
it.
just remember it's not me stealing.
Yeah, no, that's right. Theft, Kaylene. It's just important to understand the rules, what you're doing, and do it correctly. Setting up a correct portfolio, setting it all up. You know what I mean? Because listen, I had the conversation with a client this morning with another guy. Was basically, listen, you can make a lot of money in crypto, or you can get wrecked, and there seems to be a lot of not a lot of middle ground.
Right. Okay.
Get advice.
Get advice. Yeah.
Definitely.
Education all the way.
Yep.
Right. Let's do that for sure. And I think that to me, the big thing that comes out of all of this
Have
is
to stop talking, mate. It's 4 seconds over, 5 seconds.
Thanks,
over.
mate. Look, it's so helpful.
Oh, God.
Structures. Get your structures right. Go to the people who will give you the right advice and get your structures right.
Yep. And I'm happy to have a free consult with anyone.
Okay.
So reach out and I'll answer any questions.
Go through orangebrickroad.com.au.
Yep.
Boom. Links there, and away we go. Thank you very much for being part of the Crypto Hour of Power here on Edge Radio Australia.
Maintain the rage.